What was your major, Tim?
Actually, it's funny you should ask. My major is hospitality management, hotel and restaurant management.
Are you serious?
It is. I worked for Hyatt Hotels when I graduated from college.
In Columbus?
In Columbus. I worked there for quite a while. I was in the management team, and then I decided I really wanted to get into something more sales-oriented. They had, this is crazy, but if you remember back in 1991, there was something called Ameriflora. It was this huge floral exhibit in Columbus that brought people from all over the world to see this floral exhibit. So the hotel had no desire to move me because I was doing such a great job in operations. So I decided to move myself. And Red Roof Inns had a test market hotel to go limited full service called the Truman Club Hotel, which was the founder of Red Roof Inns. So I actually went there and became a sales manager and then a director of sales before, I decided to wrap that all up and give away a cushy, salary job for a straight commission, loan officer job, and move to Cleveland.
What made you decide to do that, though?
I knew I always wanted to move back to the Cleveland area. My family's here. I grew up here. I really enjoy it. Really, the idea was when I was in college, I was like, I'm not exactly sure what I want to do. So I knew that if I got in the service industry and I learned customer service, now I could decide what I wanted to do from there. Obviously, I had family that was in real estate. I looked at the finance part there, too. I thought, geez, I'll give this a try. And trust me, it was a long road. It was, pay your MasterCard with your Visa until you could figure things out.
So what do you remember what year was it you moved back to Cleveland?
93.
And then you're initially like, I'm going to go be a mortgage originator?
I interviewed for a couple things in the greater Cleveland hospitality industry thing, and different people that bring different organizations to Cleveland, and I didn't get the job. It was crazy. They're like, and it was one of those things where I really want. I'm like, all right, I could have used this and so forth, and by the gift of God, I didn't get the job, and I was like, all right, well, I'll just try this residential lending thing, and the rest is history. I'm trying to think.
I was trying to think of this, and I haven't put it together. I was even looking for old business cards, and I threw them out. So when this happened, who was the bank you were working for?
When I First Security Savings Bank.
Okay, I don't remember that one. So that's your number one.
Right. Then I went to Republic Bank.
I remember Republic.
Right.
And you were with Republic for years, weren't you?
I was Republic. Well, I started in 1993. By 1994, I went to Republic Bank.
Okay.
From 1994 to 2001. So I was there for quite some time. 2001 is when the gentleman who headed up the mortgage operation for Republic Bank went to First Place Bank. First Place Bank was the merger of First Federal Ward and First Federal of Youngstown. So these two medium-sized banks merged in the Mahoning Valley and made the largest bank. I always joke and say two medium-sized banks merged, made the largest bank, and then they said, oh, crap, we're the largest bank. Now what do we do? So then they wanted to move to a larger metropolitan city. Obviously, moving to Cleveland was smart. So they hired me and a counterpart to open up a West Side operation and East Side operation. I managed the West Side operation. Then we bought Northern Savings and Loan out of Lorraine. So then I had a branch network from there. From 2001 to 2014 is when I kind of ran First Place Bank, and that place exploded. It was quite a ride in the mortgage industry. Unofficially, I was responsible for, obviously, I was a producing manager, which I've always been a producing manager. And then I had a rather large team that was under me, but unofficially I also had setup, processing, underwriting, closing, that was part of the team I put together, too. So it was all pretty nice operation until, all sorts of hell broke loose in the banking industry and a lot of regulations and so forth, and they were bought out. And then at that time, in 2014, we're like, all right, you need to go to a larger bank. But I didn't really want to work for a big bank. I'm like, all right, well, let's look for a big bank that has a small mortgage presence and a large portfolio that we could grow it. And that's what, First Place Bank, or First National Bank, bought over Parkview.
You had to have tons of people reaching out to you trying to hire you.
Yes.
You never went the mortgage broker route.
Right.
Why?
Well, I would say that, not to say that the mortgage broker route is a wrong way to go, it's just a different way to go. So for me, my success has always been offering a wide variety of products and programs. So in a mortgage broker shop, you have kind of, okay, this is the broker shop. Certainly, do they do construction loans? Yeah. Do they do them well? No. Do they do bridge loans? Sometimes. Do they do them well? No. Do they do renovation loans? Do they do them well? No. So to be able to say I work for an organization that, so if you say, hey, Tim, you're my guy, I really want to have people refer business to you, but I really just don't want to say, hey, here's just the vanilla. Here's just somebody buying a home, putting 20% down. If somebody bought a home and then they want to refinance, or they bought a home and the home inspection falls apart. Now what do I do? Well, I guess it falls apart. No, the answer is it falls apart. The answer is, well, why did it fall apart? Well, it fell apart because the foundation is having some issues. Well, what's it going to cost to fix the foundation? What's it going to cost? About $20,000. So, well, is the seller willing to reduce the price any, in order to, still keep this transaction together? It's like, yeah, well, the seller said they reduce it by only 10. I say, well, then I ask your customer, hey, are you willing? You knew that the foundation had issues. You saw the home and so forth. But if you could buy this exact same home for $10,000 more and you have a completely secure foundation that's waterproof and done, would you do that? And the customer says, well, yeah, of course I would do that for $10,000 only. I go, great. Then what we'll do is we'll lower the price by $10,000. I'll take you the quote for $20,000, add it to the new purchase price. We'll do a renovation loan and keep the deal together. So those are the kind of things that you have working for a bank that you don't necessarily have working for a mortgage company.
Mortgage broker.
Right. Still things like, so that's one of the great things about First National. It's a $50 billion bank, not too big, not too small, large mortgage portfolio. Doing competitive stuff in the jumbo category, the construction category, the physician category, the renovation category, Community Reinvestment Act, stuff like that too. So,
and do you still do bridge loans? Still a thing today?
Actually, it's funny you should say that. I would say the bridge loan program is the most popular program I have that we very rarely use. Now, you might say, geez, that's why.
Yeah.
And the answer is because everybody wants to buy a home without selling their house first.
Sure.
But they don't. But you have to qualify in order to do so. So people will call me up regularly and say, hey, Tim, I'm interested in moving, but I really don't want to sell my house unless I find the house I really want to buy. I said, that's fantastic. Let's go through the process. They say, great. So, hey, I own a home. It's worth $300,000. I only owe $150,000 on it or $100,000. I said, okay, and I'm going to buy a home for $500,000. Okay, great. So what we'll do is we'll go through the works and say, hey, listen, should you find a house that you want to buy and you haven't sold your house first, then we'll go ahead and let you borrow some of your equity temporarily in order to buy the new home. So for an example, you buy that, you put an offer in for a $500,000 house, you're going to put $100,000 down. We'll let you borrow that $100,000 on your current home, and then once you sell your current home, you can pay it off. They say, geez, that sounds great. So I go through the process and say, yep, you qualify, and this is the important part, you qualify to do a bridge loan and buy a home before you sell your home. They say, good. And do me a favor. When you find the house you like, make sure you put maybe a 45-day close on it, roughly about that period of time. I say that, and they say, okay, good. And so they call me up and say, hey, listen, Tim, I did buy a home. I haven't sold my house first. My wife and I love it. This is going to be great. I said, fantastic. I said, well, what we'll do is we'll do the bridge loan for the down payment. So we'll start the loan application. So I start the loan application. I don't do anything about the bridge loan because I don't really have to start a bridge loan until about 30 days before closing. Usually within 7 to 10 days of starting the loan application, the customer calls me back and goes, Tim, you're not going to believe this. Of course, I believe it. We sold our house. Mm-hmm. I go, great. So we don't need a bridge loan. Even better because I didn't even start it. So it's funny because the bridge loan program is a fantastic program because it gives people the ability to put an offer in non-contingent upon the sale of their home. Very rarely do they use it. And I've been doing the bridge loan for 30 years. And I've done dozens and hundreds probably of bridge loans. In today's market, where it's such a hot market where people's houses sell quickly, then the bridge loan is a great program just to be able to buy first.
I still like that you're the only game in town that promotes that. Nobody promotes it. And it's something you have in your toolbox to use. Yeah. Now, I know, and I'm going to go back probably 10 to 15 years. You and I were in a deal like that we had that scenario, and I actually think that it ended up selling before that, like you said. But I'm shocked that I guess today I shouldn't be shocked. It's just I haven't seen anything like it in the last 4 years, 5 years, that it just hasn't been around. But have you done had any go to
all the way through?
Yes.
Oh, absolutely. Probably one out of 10.
1 out of 10.
Mostly because two reasons they 1 out of 10 do it. You, as the agent, say to me, Tim, this house will sell much better empty. So you have a customer, you refer me to the customer says, hey, can I buy a home without selling mine first? And I say, sure. And you say, okay, great. And they say, okay, well, you say, hey, listen, the home itself will sell better empty than it will full. So we'll go ahead and still do the bridge loan. So we're not going to actually put the house on the market till maybe a week or two before closing. That way they can move out, do the things they want to do to it, and then we'll put the house on the market, and I bet you I can get a better price for these people if they sell first. Then you get odds and ends. My wife's pregnant. Mm-hmm. I'm not going to sell we're not moving out of here and not put my house for sale, whatever. So I'm going to buy the new house. We're going to move in a new house. We're going to take our time, and then we're going to put our house up for sale, things like that. Or construction loans. So if somebody says, hey, Tim, I have a house to sell. I'm going to build a home. the builder's requiring a 20% down payment or something like that too, or a construction loan, then we'll do the bridge loan so they can bridge out the equity, start the construction loan of the new property, and then pay it off when they sell the house and the house is done.
When we're saying construction loan, is that person the general contractor? Or are you working with a builder?
Builder.
Okay. So my guilty pleasure is social media. I love TikTok, and I went down the rabbit hole yesterday of this young kid. I don't know where he bought. He bought a home, and it was he built it through Ryan. He went with Ryan's program. Gee, we may or may not use this, by the way. We'll talk about it after we have this conversation. Okay, so put a mark on your notes. So this kid bought a home from Ryan Homes. He used their lending department. I think it's NVR or something like that. So they quoted him his mortgage at $3,200, and that's what he was in. 3 months into the house, and supposedly, from what he's saying and all the questions were asked, he had a fixed rate, 30-year fixed rate. I think it was FHA, and now his mortgage payment because of taxes and insurance went up to $5,400 from $3,200, and he can't make payment. Where the hell? What went wrong there?
Geez, I'd have to put some real thought behind.
I mean, but that's what I was trying to think of.
I mean,
Your taxes can't be that much of a difference.
Well, I guess it depends on where it is. I mean, supposedly that would seem unlikely because if you're saying a house is $3,200, they didn't buy a $1.8 million house in Manhattan, or something like that, to where taxes are $2,000
a month. But my question, I guess my point is this: I'm building a home. You're working with me. Are you educating me to everything that I need to know, or is it because it's dirt? You're only really assessed as the builder. You can't come up with a tax number, can you? Or are you that good that you're coming up with? Here's what your taxes within a couple $100 are going to be.
Yeah, there are tax calculators that do that. You just put in the different characteristics, where it is, how much it costs, and so forth, and they come up because we do have to put that. Now that being said, it's just a guesstimate. And there is some, because remembering too, taxes, especially in this area, are paid behind.
So are you getting a tax
Right.
escrow for the buyer and saying you need to put some stuff in reserves?
What we do is remembering there's two different types of construction loans. There's an end loan, and then there's a draw loan. So an end loan says, hey, I went to a builder. The builder says they're going to build me a home. I gave them a 10 or 15 or 20% deposit. They built the home. They financed it. And when it's done, now it converts to where I go through and say, yep, this is the perfect house. Let's buy it. All right, so that's an end loan. For something like that, too, we're still going to just use the mortgage calculator and put in a number because the taxes haven't been assessed yet at all. For a construction draw loan, that says, hey, Tim, I have a builder. They're going to build a home, and I have to provide them financing during the construction period. You say, okay, that's great. So during the construction period, there is no escrow set up. There's no tax and insurance set up. We do disclose to the customer, you are responsible for paying all the taxes on the property until the home is built. So they have to pay a land payment, an interest or a tax payment based on the land. And depending, quite honestly, that could be a lot. I'm doing a loan, did a loan for a guy who bought a, $1.4 million house and knocked it down, and so forth. So he still has to pay taxes on the $1.4 million house. But so there's disclosures that are made, and there's conversations I have with them to make sure that they know they have to pay the taxes during the construction process. At the end, then our construction department reaches out and says, hey, your loan is converting from your construction phase to permanent financing. We need to set up your escrow account, and we need to collect this much money to start your escrow account for tax and insurance, if they have an escrow account for tax and insurance. Of course, they have the option of not doing that, too.
So allegedly, this poor kid who he made like a 5-part series.
I know what happened to this poor kid then. So what happened?
Nothing happened, and now he's putting it up for sale because he can't make his next payment.
So here's what I'm assuming probably happened to him, which is there's a lot of information that's given to somebody when they're buying a home, and there's a lot of information that's given to somebody when they're building a home. And it is, there's accountability. It's your responsibility, though, to read through and understand these things. I'm guessing if this is what happened with Ryan, same thing happened, that the MVR set up his escrow account either set based on an estimated property tax number or on the land, okay? And so that would be a very small number. Now, that person who bought the home gets a mortgage statement, and on the mortgage statement it says, here's how much you're paying for principal, and here's how much you're paying for an interest, and here's how much you're paying for escrow. Obviously, if the guy, let's say, is a $3,200 house payment, he probably built a $500,000 home. He knew that his property taxes were like $84.35 as a guess, you know? So he would have looked at the statement and said, geez, I'm paying not very much in my escrow. But he's also saying, but my house probably had some dirt at some time. Some time had passed, the county then will put a tax value on it. Like in here, there's times where people get their escrow analysis and say, hey, your property taxes went up, and there's a shortage in your account. Okay, there's a shortage account because, remember, you were living there almost for free before they change. So my guess would be is that the county came back and said, hey, listen, you've only been paying on dirt. We've assessed it. And not only do we assess the value of the property, of course, we assessed it in January, called of 2024, and here it is, February 2025. So there's a shortage in your escrow account. So not only do we have to bump up your escrow account maybe $1,000 because your taxes are $1,000 a month, but we have to bump it up another $1,000 to make up for the shortage from the time where it was being assessed and you weren't paying the accurate amount. So certainly that's a surprising thing to somebody who bought a home.
Sure.
But also, you remember, there is accountability. You're looking at your mortgage statement every day or every month and saying, geez, my mortgage statement is $3,200, but I'm only paying $84. It's unlikely my $500,000 house is being taxed $8,400. So hopefully you're saying, at some point this is going to catch up to me. I'll put money aside to make sure that doesn't. So that same guy had the, whenever you have a shortage in your escrow account, you also have the ability to make up the shortage. So he might say, hey, my payment's $3,200. It's $1,000 for taxes, $1,000 for the shortage. I'll take the $12,000 shortage I have. I'll pay you, write you a check because I've been in my mind saying, geez, I bet you I'm not paying enough. And then my payment only goes up by the appropriate amount for property taxes.
Interesting. I knew you would be able to tell me, and again, this is something I may not, but I just like, what the hell did they do to this kid? But he claims that, this is what they said. I'm watching this thing. Oh my God, this poor kid, and no agent involved, nobody to guide him or give him his first house. Just heartbreaking.
You're a little more sympathetic than I would be. I'd be like, I didn't read your paperwork.
Yeah, read your paperwork. Getting back to the mortgage stuff, when you started out, you were a legend. You were so well respected. You were young, and I had not met you at the time, but the way everybody spoke about you, and you going back to all the old Realty One Smythe Kramer agents, you owned all that, and I think that was really before the real estate companies got involved with being all one-stop shopping. But how did you build your business at such a young age that you just regarded as this is the guy? And if you're not using Tim, you're doing a disservice for your client.
Yeah. Well, thank you, by the way. That's very nice.
But that's, it's a true statement.
Yeah. Thank you.
And still today, but we're going back before it was.
You're not out to the
There wasn't
pasture yet.
social media but
yes, right.
What did you do?
That's funny you should ask that question. So part of my role at First National Bank, too, is an area sales manager. And the majority of that is just in the training process. And so I have been one of the top loan officers for the company I worked for and the company before then, my whole career. And in doing so, people want to know what's the secret sauce, and it's kind of funny because there isn't a secret sauce. There's absolutely positively no secret sauce at all. The only thing that I can tell you, it's about customer service. So it goes right back to my days of when I learned customer service in the hospitality world. So learning customer service, most importantly, consistency. That's a big factor. Knowledge and experience. So when you've been doing something for so long and you've had such a great amount of success, having that kind of experience and knowledge. And so add it with customer service and consistency, just what we talked about before. Somebody buys a house and says, geez, I found this house. It's the most beautiful house I've ever seen in my entire life. I said, that's great. And then they call me up crushed because the home inspection fell apart because the foundation's broken. And I say, okay, well, wait a minute. Before you just throw the towel in, what do we talk about? You loved the home before. Let's do a renovation loan and fix the basement. Maybe get some money off the purchase price.
That's a key, though.
Right.
You're not. You've worked hard. You're gonna, and they love that house. You're gonna see if you can keep it. Where a lot of people are like, oh well.
But you do the same thing in real estate.
I
do the exact
do.
same thing in real estate. So a very successful real estate agent does the same thing. The home buying process is extremely stressful time, no matter what. And it's even funny for us in the business. You go through the home buying, you're like, wow, this is a stressful time. You really get to experience what the customer does. But your job and what you do is such a wonderful job as well is just taking that stress out. Hey, this happened. This is how we're taking care of it. And most of the times, a property appraisal comes in lower. Well, oh my gosh, I can't believe it. Well, how much more money do I have to come up with? You don't. We're just going to do a one-time PMI payment. The seller agreed to pay for it. Everything stays the same. You already got that cleared? I already got that cleared. Oh my God, that's fantastic. The home inspection, there's really a concern about what's going on with the radon. I've got a great radon guy. This is you. They go over there, they do the test and so forth and say, hey, listen, there is, but they're going to put this mitigation process in now. Now it's, it's down to a lower level than most houses are going to have. They're like, okay, that's great. I'm glad you took care of that. So it's just having that experience and the knowledge to be able to say, okay, there's always it's a stressful time because stressful things happen. You as an experienced real estate agent and me an experienced loan officer know how to take care of those issues to make it less stressful and get the solutions to the problems that people have and fix them before they even become an issue. And it makes continue to have a successful transaction together.
When you started out, did your business build from people coming into the bank looking to buy a house?
Never.
Or did you network with real estate agents back?
Yes.
Really?
Yeah. So 90% of my business, well, it's probably more like 80% of my business because obviously we still have a lot of, maybe even 75, a lot of repeat customers too. But no, always my connection has been to the real estate community. And there lies probably the best part. If you really want to have a successful transaction of purchasing a home, you go to the path of least resistance. The path of least resistance is hire an experienced real estate agent who refers you an experienced loan officer who takes care of all the issues that happen during the process, and now you've had a pleasant experience. You've seen it, I've seen it, where people don't go that process. Maybe they want to go a discount process. Maybe somebody was offering something slightly lower at an interest rate that that are out of California or Arizona, and you're like, okay, and they're like, well, wait a minute, this happened, and before you know it, they're moving into their big, beautiful new home. They couldn't be happier, but the stressful part is just taking the joy out of it. So knowing that if you sit there and say, hey, I'm going to hire an experienced real estate agent who's going to refer me an experienced loan officer, I got a much better chance of when we get those keys, we're smiling from ear to ear because the challenges that came up were taken care of by the experienced people that I hired. So for me, making sure that I'm available to somebody like yourself, that makes the whole process great. When I work with an inexperienced real estate agent or a discount agent, something like that too, or somebody buys sometimes a for sale by owner, that process is more challenging because there's not somebody there to hold their hand like you do in order to make it a nice, enjoyable experience all the way through.
I love that you said that. It's just so true. I'm sure you're like I am in the way that you will sit down with a client and you know you're the right guy for them. I can say, go with Tim. Another agent, go with Tim. This is a guy I use. And then, like you said, they'll pick the cheaper rate.
Right.
Not knowing that maybe there's closing costs that will be much higher than what you had. Does that get you still to today? Like, man, I wish I would have got that, or I'll get the next one.
I'm a competitive person.
Yes.
But most importantly, some of it has to do, I got to keep myself accountable. Because I keep other people accountable, I keep myself accountable. It's my job to communicate things properly. So when having a conversation with somebody, we're going to go through the process of the pre-approval process. It's going to be thorough. It's going to be detailed. And that's because when you present a pre-approval certificate from Tim Atkinson, the listing agent knows.
Gold. Gold.
So there are times where customers and real estate agents have called me up and said, hey, Tim, just want to say thank you. Our guy won. That he or she wasn't the highest bid at all, but they got the pre-approval from you, and they knew this is going to be worth better than the pre-approval that came from someplace else. So that has a great amount of value behind it, too, and something I appreciate very much, too. That being said, too, then it's time, to put my money where my mouth is and say, hey, listen, we're offering a competitive program. So not only do I have the knowledge, experience, and time on the job that's given me the ability to be successful, but I also have a very competitive interest rate, which we do, that goes right along with a competitive closing cost quote. So it's my job then to communicate that stuff to people. Are there times where people, I can compete with anybody. I can't compete with dishonesty. So the problem you have is there's a lot of people that aren't accountable. So there's times, I'm actually going through it right now, that somebody's like, hey, listen, this person has a lower interest rate and they're out of Arizona. And I said, okay, great, but where's the accountability? You don't know who this person is. You found them online. And then if they don't deliver what they promise, are you going to get in your car and drive to Arizona and sit down with them and say, hey, this isn't what you promised? No, you're going to be stuck. And unfortunately, I do lose a lot of business for dishonesty, or I do lose a lot of business to people who overpromise. And overpromising, and typically at least half of those people call me back sometime during the process and say, hey, listen, this isn't going the way I thought it was going to go. Can I still go with you? And the answer is, unfortunately, no. You got to close in 10 days. You're going to get stuck with the higher rate or the higher closing costs because that's a choice you made. So that's a big factor in it. It's just part of the business a little bit, but hopefully you look at people and say, hey, listen, you didn't, when you went out car shopping, you didn't go car shopping and buy the jalopy. You paid more money to have a better car and so forth. And certainly you're not paying more money to go with me, but sometimes there are people who overpromise and then people decide to go that route.
This is a true story, and I'm not going to mention the lender. I had a home in Westlake last year and went to multiple offers. And we got an insane offer, pre-approval. You had a buyer, an agent actually involved in it and didn't get it. Your bid was lower. The crazy offer got it. But when I have a sit down with my clients and we're going to go over the offers, the one thing I know I do, and I hear it from a lot of my peers that they do it as well. This is gold. This is Tim Atkinson. It's gold. I've worked with him, and I know that this is solid. Not crazy about this. Don't know, and I've never heard of these. But what I do is I call the lender, unless it's you, and I know it's I want to know. So I asked this lender, "Is your pre-approval? Did you check income, assets, debt? Oh, solid."
Mm-hmm. It's a great point.
Within 7 days of that loan starting, no, I'm sorry, 3 days, they said, you know what, we're sorry. The lender sent an email to myself, the agent, we can't get the deal done. We didn't check. We didn't know that they had all this debt. How'd you issue a pre-approval?
There lies a very good point, a point that very much people don't know a lot about. The pre-approval process is not like a consistent regulatory process. The pre-approval certificate or document is only as good as the person who did it. Mm-hmm. Like when I do a pre-approval, I don't have to go, okay, I collected tax returns, bank statements, and pay stubs, and so forth. I have all the documentation necessary to get a pre-approval, and it looks good to me. Now, here, Mr. Underwriter or Mrs. Underwriter, now you take a look at this because I need to have somebody to validate my work, to somebody with more experience and knowledge and so forth. That doesn't happen. This is just me. All right. So if I don't have the number of knowledge or experience, or if I make a mistake and so forth, then that pre-approval becomes is no longer valid. Mm-hmm. And there's no repercussion to it whatsoever. There's nothing that says you provide a pre-approval certificate and then later on you couldn't provide the loan. Nothing bad happens to a loan officer who says, yep, they're qualified, only to find out, nope, they're not. So a pre-approval document is only as good as the person who provided it. And that's where 31 years of experience and the amount of volume I've been able to do has been the person. So that's why people like yourself say, hey, listen, I get it. But I'm telling you, I don't know if these people get a loan over here. I don't know if these people get a loan over here. But I do know if this person's going to get a loan. So regardless of what you're looking purchase price-wise, this one's worth its gold. You know it's going to go through. And then who knows what's going to happen over here, too. Because it's not, it's not regulated. So it's not, you have to have an experienced, knowledgeable person before you know that that's a valid document.
Today in the last few years, the market's so competitive and everybody's in such a hurry, and a house pops up and some of them will go online. A friend will issue a pre-approval. It's just, it's wrong, and it makes our job as agents so much harder. And if you haven't done this for a minute and have relationships and have worked with people in the past, you need to make your calls and you need to check with lending. But it's again your reputation, man. You've earned that reputation. That's why you are the success that you are.
Thank you.
I just think it's amazing. Let's talk about what are your favorite products for people? Is it on a need basis, or is there some products that you're like, this is the best thing that I have?
Well, obviously, in our case, our number one, our programs that are best are vanilla. There's no doubt about it. The neat thing about getting a loan at First National is that you're going to originate the loan with me, and then you're going to make your payment to First National Bank. We have branch network throughout Cleveland. If you do want to come in and have a conversation about your escrow account, why'd your taxes go up, we can do that. You want to make more money towards the principal and maybe do a recast and have your monthly payment, you can do that right here. Once a loan closes, you can say 2 years, 3 years, 5 years, 7 years later, hey, Tim, I've got a question about my mortgage loan. I'm still the guy that's going to be able to pull it up and say, yep, you can answer those questions too. That being said, program-wise, our physician loan program is second to none.
The best probably in the industry, isn't it?
And I just was on a conference call where I think I texted you that they're even making it better as far as competitiveness and the interest rate part. They have match day that's coming up in March. Match day is when the students find out where they're going to do their residency. And, of course, Cleveland's a huge market for physicians with the hospitals that we have. And then residents and fellows are no longer in their fellowship, and they want to buy a bigger home too. So that's the physician loan program is an extremely popular program is coming up, and our interest rates are just second to none, as well as the ability to borrow up to $1.25 million with no money down. It's just crazy. But physicians have the lowest default rate of any profession, so we do a specialty program to really make their programs easier and lower an interest rate. So we go from physicians, and whether it be a resident, buying a $180,000 or $220,000 home to, somebody who finished their residency and now is buying a $1.25 million home. Those are all the way through. Going on the complete other end of the spectrum, the bank does a fantastic job and has great programs with the CRA, which is the Community Reinvestment Act for people in that category who might fall into the low to moderate income category too. So, and low to moderate income for us is anybody making at this current time like a little bit less than $78,000. So it's still a good income. So if you make less than $78,000, you can buy a home anywhere in the city of Cleveland with no money down, no private mortgage insurance, and up to a $5,000 grant to pay your closing costs. It's true. And on top of that, they do something called our community uplift. So if you buy in a targeted area, which there's quite a many there's a lot of targeted areas in Cleveland too. Not only can you buy the home for no PMI and a $5,000 grant towards closing costs, they'll give you a $15,000 grant towards your down payment.
No kidding.
Yeah.
That's fantastic.
I know. And now when you go back and say bank, mortgage company, there's a benefit of the bank. So somebody calls me up, and quite honestly, when people call me up and they qualify for that community program, and I say, well, you qualify to buy a home with no money down, and we're not going to charge any PMI, and the interest rate's still competitive. It's not like they bump the interest rate. So great 30-year fixed interest rate, no private mortgage insurance, your payments, principal, and tax insurance, so it keeps your monthly payment lower, and we're going to give you up to $5,000 to pay for your closing costs. Like, what's the catch? There's got to be a catch.
That was going to be my follow-up question.
Right. And you're like, I know that it seems like there's a catch, but banks have requirements to lend to different income brackets. So this bank saying, hey, listen, we know we lend to a lot of people, physicians and high net worth people buying $1 million homes, as well as people buying $800,000, $600,000, $400,000, so forth. But we also want to make sure that we're lending towards all income categories. So we're going to come up with a specialty program that do a really great job lending towards everybody.
That's good stuff.
Yeah.
That's really, really interesting. Tim, did FHA, it went away for a while, and it's, especially after COVID, you couldn't get an FHA. An FHA loan wasn't going through with multiple offers. It was
rare.
Very rare.
Rare.
Is it?
Rare.
Do you think it's back?
Officially, it's never left as far as being competitive, as far as being popular. It could be. The unfortunate thing you have about it is that as a real estate agent and the seller, they look at they look at offers and so forth and say, okay, well, this person's buying a home, and in today's market, the house prices have gone up a little bit. So if somebody says, hey, my house is worth, I'm going to list a house for $250,000, and people are offering $265,000 to buy the home, well, in an FHA transaction, you're putting 3.5% down, the house underappraises, now the person has to come up with more money. They still can, but it's unlikely that they are in that position to have more money FHA than they are in a conventional loan where they're putting 10 or 15 or 20% as a down payment. The unfortunate thing about it is FHA interest rates are probably 0.5% lower than conventional interest
I
rates.
just looked at that today, and I'm like,
so it's still an unbelievably fantastic program. Same with VA. The unfortunate thing about VA loans is sometimes sellers assume that the person is less qualified because they're going VA, and they're absolutely positively not.
I've explained that. I did 2 last year because I knew it was this is not a stigma.
No.
This is
it's
great
benefit that
Yes.
the veteran earned, and that they could be able to use. And they can buy a home with no money down. They're not paying any monthly private mortgage insurance. They get a competitive interest rate. It's a very easy process to go through. Just like people, like many times physicians can do zero, they don't. A veteran can do zero, but sometimes they don't. So you can sell a home to a veteran, say zero down, and still put like an escalation clause, and the veteran can go, hey, listen, if it underappraises by $10,000, I'll come up with the money and still buy my VA loan and be able to get the lower interest rate and the no PMI and so forth. So VA loans are fantastic loans, and I probably do one a month.
I agree with you, and I also think that over the past 4 years, with the explosion in agents coming into the business and mortgage brokers in the business, I think that being in it a long time, FHA was always a thing, and we knew it was an unbelievable product, and it's great for a buyer. And I just think that people just didn't take the time to really understand what a fantastic product is. And VA, I've heard people like, well, I will never take a VA. Why?
That's silly.
It's
It's a little mean.
yeah, it's fantastic.
Yeah, it's a great loan program. You're selling it home to a person who's earned a benefit.
Did the cash offer phenomena affect you?
Yes, cash is it's
Oh, my
almost a
goodness.
worse four-letter word than a bad four-letter word.
It blows my
one of my
mind.
biggest competitors.
It has
if
to
it
be.
isn't, yes. And not only cash, because there was a day where people were like, oh, well, they're going to buy the home for $225,000, or they're going to pay cash. Oh, they're going to pay cash. That was a day. Now they're buying homes for $1.4 million, and they're
cash?
writing a check.
It blows my mind.
Yes.
Yes, blows my mind. How about what's your thoughts? Hard money lending loans.
They're coming back. There's no doubt about it. You're seeing a lot more.
Mm-hmm.
They play. They're never a factor for me because a hard money loan is.
That's not something you do.
It's not something I do at all.
Okay.
So a hard money loan was obviously somebody who doesn't qualify for a regular loan is going to get a hard money loan, or sometimes you're going to see a property flipper, an investor who's buying properties.
Very big with them.
Yeah, that's where you see it the most time like that too. Now there's going to be a big difference between hard money loans and of course non-conforming loans, or the days of the no income no asset stuff. That's and you are starting to see some brokers and so forth come up with bank statement loans again, which are okay. Will prove to us that you're depositing funds from your business, but their tax returns don't show it. That's not something we're involved with. I don't see that being something any kind of future. That loan program was a fantastic program when used the right way, and it was abused, which is usually what happens. So a no income, no asset loan is somebody says, or no verification says, hey, listen, I'm a self-employed person. Here's my tax returns to show that I'm a self-employed person, and here you can see that I made $400,000 last year, but I took $350,000 of deductions. And we know sometimes deductions are deductions, and sometimes are deductions the government lets you to do so. So you look at that and go, well, this person's obviously making a lot of money. They're buying a property and putting 25% as a down payment. They've got a 790 credit score. This is a loan that we can go ahead and do. But then it got abused. People are saying, hey, listen, I just don't want to show you my tax returns. And you got people buying outside their means and so forth. And now the program, went away.
So, Tim, let's talk about buyers. What advice would you give to a buyer, and what common mistakes are out there that a buyer can make during the loan process?
Yeah. I would suppose, once again, when I go back to my service and I guess my service experience too, every buyer is different. So you really have to, and when you have experience like I do, you're having a conversation. You know very well when you introduce somebody and say, hey, listen, Bill and Samantha, go talk to Tim, and I talk to Bill and Samantha, and I go, these are super nervous people. Let's spend some time together. So let's meet at the branch and go over the process and bring in your documents and talk a little bit about it. Or here's Bill and Samantha, Bill's an accountant, Samantha's a vice president or whatever it may be, and they just really want to get things going quickly and so forth. And the process is automated and gets done quickly. So I would say, obviously, what we talked about before, anything that's too good to be true, almost 100% of the time is. So, one of those things where you get the bright, flashy things that look like, hey, this is the lower interest rate, the lower closing costs, and we can do the things faster and better and quicker and cheaper. It doesn't really come through the way it ends up happening.
But the loan is set. We're in closing. What pitfalls could happen that buyer could do in those 30, 45 days that could put them in jeopardy?
Well, there lies the process, too. If you have a thorough pre-approval process like we do, then they know not to do the things they do. So a lot of times people say, oh, geez, I've already got pre-approved, and my car needs traded in, so I went and traded in my $250 payment for a $700 payment, and now I don't qualify for a loan any longer. Making sure you don't, once you've been pre-approved, make sure you don't increase debt. Make sure you don't take deposits that are unexplainable.
Don't buy any furniture yet.
Yeah. Well, there's a conversation you would have too. You could certainly, once again, everyone's a little bit different. So if someone's calling me up, they're buying a home for $500,000, they're putting 20% down, they've got $500,000 in the bank, they're really well qualified, they want to buy furniture, go ahead. That's fine. Somebody's, hey, listen, your qualification's a little bit tight. So make sure you're staying in close conversation with your loan officer to say, hey, listen, don't make any changes here. You don't want to go out and buy furniture. You don't want to trade in your car. You want to take deposits, funds in that I can't explain where they came from. Those kind of things too. That's a big thing that people do kind of often. Like, well, I had $4,000 sitting at home and I'm going to use the money. Okay, but we don't know where it came from. So when we don't know where something comes from, we think that there's a chance you might have borrowed it. Well, if you borrowed it, it came with a payment that comes in your debt ratio. So unexplained funds and closed error that get deposited are a big factor too.
Yep.
Don't quit your job.
Don't quit your job. That's another one.
And
it's you and I are both laughing, but
it happens.
That's a scenario I could think of 2 or 3 times where
it
happened.
Yep.
And I'm just, how could you quit your job?
Yeah, it does. Well, there's a lot of people a little bit afraid today, with their jobs and stuff like that too. So they're keeping things
Absolutely.
moving.
Let's turn the table and talk about sellers and how a pre-approval is so important, and who it comes from means a lot to the actual seller to know that they have somebody that's been vetted and they're ready to go. But I think a misconception that a lot of people have is on appraisals with loans. If somebody's going to put down a decent down payment, and it's still the way old school you're doing an appraisal, a lot of people feel, well, they're not, it doesn't matter if it doesn't appraise because they put a lot of money that the bank doesn't care. That's not necessarily true.
Well, it's not necessarily true, mostly because, there's pricing, so when let's say somebody buys a home for $500,000, they were to put 50% down, the interest rate could be better because of your loan-to-value position. Now, if it only appraises for $300,000, now my loan-to-value position's changed, and maybe the interest rate would be a little bit higher because the risk factor's higher because of loan-to-value position.
Is there a down payment that they'll do a desktop appraisal or waive the appraisal? Is there a price point?
There's not a price point that they waive appraisal. There's a property. So for decades, as the system of the process has become more automated, all the data has been fed into the system that talks about the fact that if you buy a home for $450,000 on Millard in Bay Village or something like that too, that's pretty much what they sell for, because there's been 200 that have sold in the last 15 years in that neighborhood. And so once you put in an address and so forth, because remember, there's still an automated process of the mortgage program, or process, I should say. You put in the address, you put in they're buying it for $500,000, they're putting $200,000 down, and they'll come back and say there's a familiarity there that there's not a need to have an appraisal. So you have what's called a property inspection.
Gotcha.
Now you might buy that same $500,000 in LaGrange, but we don't have that kind of data from houses selling that often because they're not maybe that many that happen. And they say no. You say, well, why would I have to do? I don't have to have a property appraisal here, but I do there. And just because of all the data that's been inputted the program and system to be able to say, yes, we need an appraisal. No, we don't.
I've had scenarios, Tim, where say 20, let's just call it 20% down. $300,000 house appraises for $295,000.
Right.
Okay.
That's silly, but okay.
It's silly, but it happens.
It does happen. Yeah.
And the bank's not going to lend the $300,000, correct? They're going to say, well, the buyer has to come up with $5,000 more, or the seller has to drop it $5,000 more. Isn't that the scenario? That's what it seems like it's happened in the past, that I've had situations like that.
There is. So going back, so the house is $300,000. The person's putting 20% down. It appraises for $5,000 less. So you can say, okay, now either the seller has to reduce the price to $295,000, or the buyer has to come up with more funds to put a down payment because they have to put 20% down of the $295,000
to qualify.
Maybe to qualify, but that's what they're doing. So those are the two options. There is option 3 too. Remember, because if you put less than 20% down, you have to pay
PMI
mortgage insurance. And people go, I don't want to pay PMI. Remember, there's more than one type of PMI. There's monthly PMI and there's one-time PMI. Okay. So, and that's what a lot of people don't understand too. So one-time PMI says, hey, listen, and instead of you paying me $65.35 a month for the next 3.5 or 4 years, something like that too, you'll just pay me $1,235, a one-time premium. Okay. And then you don't have to do anything monthly. So the PMI company is taking the premium one time and ensuring the bank that this is against default because of the process they've gone through. So if somebody says, okay, well, hey, listen, my house appraised for $5,000 less, and they say, well, the seller can reduce it, you can put more money down, or you can pay a one-time premium of $1,200 and be the exact same that you were before.
And that's why you work with Tim Atkinson.
Thank
You see how you just solved that problem? Where it could,
Right.
spiral out of control.
And so remember, I'm the first person to find out that
Yes.
rates are low
Yes.
and so forth. So I'm the one that's going to find a solution and tell you what we're going to do before you go, wait a minute.
But you and I have been on that side
Yes.
of a transaction where that's happened,
Yeah.
and it works out. And
Well,
everybody, a little drama, but we have
Right.
two people that can make it work out.
Right. Well, we talk about the home buying process is a very stressful process. So once you hear the home appraises less, you're like, oh, now the stress goes higher. At the end of it, it can end up being better. Because so somebody buys a home for $300,000 and it underpraises by $5,000, and they go, oh, geez, now I got to pay this extra $1,200. Well, wait a minute. We went back to the seller, and the seller said, well, I'm not willing to reduce my house by $5,000, but I'll split the difference with you. I'll lower it by $2,500. Say, okay, great. You just made out.
Yep.
At the end of the day, you just bought that.
You made out,
certainly
but
it was a little stressful, but
it's stuff
the
like
payments
that
the same.
again you need to deal with a veteran. But you answered that just beautifully, absolutely beautifully. Tim, do you does it matter to you or the bank you work with? Because I don't think you have any contact, but it always seems like when I deal with First National Bank and you, I feel like the appraisers that go out are what I would call the upper echelon, really good veteran appraisers. Is that a thing that
that's
is Tim
definitely a thing.
Atkinson thing or First?
Well, that's a bank thing.
That's a bank thing.
And then you go back to why do you work for a bank instead of a mortgage company? So the bank.
That's
obviously-
huge.
Right. Yes, it's a huge
It's
thing.
a huge
Right.
thing.
It is
And just like the lending industry, the real estate appraisers. I used to know every appraiser by name,
now.
where they lived, and
Right.
they're some of them do a fantastic job, but there's so many of them.
And there lies another difference between working with an experienced person. So if a home appraisal comes back, as we just talked about, hey, listen, if a home appraisal comes in low, the seller's got to lower it, the buyer's got to come up more, they go whatever. But there's also step 4 too is this a valid appraisal? So doing what I've done for a living for such a long period of time, I can look at it and say, well, wait a minute, this house underappraised by $5,000, but what's with this adjustment? And why did they do this? And then I could reach out to you and say, hey, listen, one of the things we'll do is, hey, you very well know, and it's funny, I've had a conversation with people before, who knows the true value of a home? The buyer. The buyer really knows the true value of a home.
Absolutely.
The buyer knows the true value because they didn't just see one house and buy the house. They've said, okay, we're thinking about buying a home, and we're going to go online and do some research, and we're going to go look at these different homes. And they've gone from home to home to home to home, and they said, you know what? I'm willing to pay $300,000 for this house because I've been out in the market, I've done my research, and I've done it. So they know that that's it. So when I call you, it's funny because I had a recent transaction, and it was a physician too, and he bought a home for $415,000, and it appraised for $400,000. And I said, okay, so I called him up, and I called the agent, and I called the customer. And I said, hey, listen, your home appraised for $400,000. He goes, oh, that's fantastic. And I'm thinking, you bought it for $415,000, right? And he goes, yeah. He goes, I know. He goes, I thought it was going to appraise for less than that, so I'm really appreciative it left. So people know what they're, because of course some days you have to pay more for a house than what it's worth today to get the house you really want. And people wonder, they go, I'm not paying more for a house. I'm absolutely not paying more for a house. I'm not going to do it. I'm going to pay more for a house. I'm going to buy a house for a reasonable price. Or in today's market, you're always like, okay, it's listed for $350. Somebody's like, well, let's go in at $275. You're like, oh, you're just wasting my time.
You're wasting my time.
So the thing about it is, you say, okay, why would it make sense to spend $375,000 on a house that's listed for $350,000? I say, well, I'll tell you why. I'll say because although today's interest rates call it about 6.5%, the interest rates are going to continue to go in the downward direction. We're starting to see a very slow tick, but a consistent tick of interest rates are going in the downward direction. At the current time, I've been doing, like I said, been doing this job for 31 years. And for 31 years, or for the first 20-something of them, 25, regularly I have 45 to 70 people that are trying to buy a home that have been recommended to me from a real estate agent that say they want to buy a home. Today, I have 146. I counted the other day. I have 146 people
That you're working with buyers
diligently right now who want to buy a home. On top of the 146, I probably have 500 people who've decided I'm just not going to buy a home now. I'm going to wait till the market settles down and interest rates get a little bit lower. All right. So not only is there a double amount of people who are looking to buy a home today in a reduced inventory market, there's hundreds that are just sitting here waiting for interest rates to go down. So you say, once again, why do I spend $375,000 for a house that's listed for $350,000? Say, well, because when interest rates go down, you're going to have more people come back in the market. And now you're also in a 3-year period of time, your $350,000 home has appreciated by at least 5%, and that's extremely generous. And now it's going to be worth maybe $45,000 more than it. You're like, well, wait a minute. So you go ahead and spend $25,000 more because you're probably going to break even in about 18 months, double your money in about a 3-year period of time. And if no one's going to live there for 3 years, you're going to go up and up and up and up. The nice thing about it is you were able to buy that home for $350,000 instead of $375,000 or maybe $4.25, which is what it's going to sell for 3 years from now. And you were able to take it a 6.5% interest rate and refinance it to call it a 5% interest rate. Matter of fact, I did the math before I came here. If you buy a home for $300,000 and put 20% as a down payment at 6.5%, and then you refinance it to 5%, you're going to save yourself $228 a month. More importantly, and this is what people do a lot, this is one of the benefits of working with First National Bank, is when people call me up and say, hey, Tim, the interest rates were 6.5 and now I can get 5. And I say, yes. They say, okay, well, then doesn't that make sense? I said, it does. It saves you $228 a month. And they say they're fantastic. But the bank has a fantastic 20-year no-cost program, and for maybe $85 more a month than you're paying now, and actually it was the exact same at 4.5%, you pay the exact same amount of money than the 6.5% you pay now. You could pay your loan off in 20 years and pay no closing costs. So we keep going back, and because we talk about the benefits of working for a bank, well, that's one of them too. You know, to say, hey, listen, the bank has a specialty program through our retail department. I work closely with a retail party. It says, hey, listen, when people go to refinance, they say, oh, this is great, I'm going to save so many hundreds of dollars. And you certainly can. Somebody look and go, hey, it's been 3 years, and saving $220 is nice. I'm saving money for college and so forth. I go, that's fantastic. Or would you like to shave 7 years off your mortgage loan and keep your monthly payment within so many dollars what it is now? They go, geez, yeah, that does sound a lot better. And I go, in 20 years from now, you're going to kiss me on the lips because your house is paid off. They're like, yes, I will.
That's good stuff.
Yeah.
That's really good stuff. It's going to happen. Rates are going to drop. And when they do, it's going to get so ultra competitive in this industry. If inventory stays where it's at, oh my goodness. I mean, I just and what sellers are going to do is, they're going to get greedy. They're going to want more because rates came down.
So there lies another great question. When do you buy?
When do you buy?
When do you buy? And the answer always with math, it's now.
It's now.
It's always now.
Thank you.
Yeah,
it's
always now. And I'm not saying because, hey, this is how I believe it, and my gut tells you this. I'm a numbers guy, whatever. And it's funny because you remember 12, 15 years ago when the market values were going down, and people were like, well, this is horrible. I can't believe it. My house, it used to be worth $200,000. Now it's only worth $175,000. I go, okay. But the house you're going to buy used to be worth $400,000. You're going to buy it for $350,000. So aren't you ahead? And I'm like, yeah, I am. Same thing's going to happen here. Somebody's going to like, well, wait a minute. If I wait 3 years and all that 500 people come back in the market, and my house that I could have sold for $400,000, I might be able to sell for $500,000. And that's great. But the $700,000 house you wanted to buy is going to sell for $900,000 now. So it's still the best time to buy a house today.
When rates do go down, will you just be overwhelmed with refinancing to the point? I mean, is that a big part of your?
It is not.
It is not.
It isn't. It isn't. It is because, but I have a staff. So, every loan officer is a loan officer. And then they have some random person that works at the bank that does processing and some random person that does whatever. I have 2 of my own personal assistants, full-time assistants that work for me only. I have a processor who works for me only. I have a closer who does all my work and stuff like that too, but closing is a little bit easier. So you can have
This isn't
people.
common. This isn't a common.
This is not common.
It's not common.
No. So my system set up and the people I have working for me are, allow me to have, take a lot of volume in. But more importantly, just like I talked about before, there might be times where I have a conversation with somebody and say, hey, you know what, I'm happy to help you refinance, but my retail partner can do this for a 20-year with no cost, and so I'm going to do that. And I do get a lot of people who want to go that route. To be able to say you can do a 20-year fixed with no closing costs and pay your loan off sooner, that's really, really good. And so I'm always going to take care of my customers and the refinance needs that they actually have too. But, I've always been a purchase loan officer, and so when the rates go down, the purchase market. Now, you might say, it should happen, though, that when interest rates go down, if we had that same amount of inventory we have today, then we're in a really wild thing. But the idea behind it is when interest rates go down, then you're going to have, there's a whole bunch of people who have, 3.25% interest rate that say, I'm not going to get a 7% interest rate. I get it. But you shouldn't say, I'm not going to get a 6.25% interest rate, because you're going to miss the bus as far as
If you want a new house,
you want a new house.
if you need
It's
more
going to keep
space.
going up in value and value and value. So there is going to be more inventory when interest rates go down, but prices are going to be higher. So it's always better to buy sooner.
Do you have any recollection of what rates were when you got into the business? Do you remember?
Oh, I've done double-digit interest rates. We've done 10, over 10.
Yeah, I want to say it was definitely 9.5, 10 when I started.
So they were lower. They were in the 3s when I started, but then they took all the way up into over 10.
Really?
And then they went back. So in 1993 when I started, it was one of the biggest refinance boom. But remember, people were refinancing to 8% interest rates.
Yeah.
And then they went to, then they're refinancing again because they went to 6, and they refinancing again, and they went to 3.5. So yeah, when I got into business, interest rates were still in the 3s and the 4s, and then they slowly ticked all the way back. And I did a couple in the double digits, not very many, but a lot of people in the 8s and 9s.
Does it growing up here and being in the industry, doesn't it blow your mind of where pricing on houses have appreciated?
Yes.
I mean, I look at stuff, Tim, every day,
Yeah.
and just wow.
Yes. You know what? I say wow, and then I smile about it a little bit. I would tell you two things. One, Cleveland has been very
Underrated.
So
Undervalued.
People move in here from
Undervalued.
Yes. So people come from other cities and go, oh my God, I can't believe I can buy this much of a home for this price. So one might say that we're catching up.
Yes.
Okay. That being said, too, it'll be interesting to find out how Cleveland expands. You go to other cities, and it's not uncommon to live in a suburb an hour away from the city.
Mm-hmm.
We're a little spoiled, going, hey, this is great. I'm, within 18 minutes, I'm downtown watching a basketball game. So, and it needs to expand and do a good job. I would say it'd be interesting to find out how it expands along the lakeshore, which is nice, and so forth, in the Lorraine and Sheffield, and around there too. And then going
Lorraine
south.
should have taken off years ago.
Yeah.
It's a really cool little
Yeah.
downtown.
I think being a little selfish and, being a father of 4 and 3 of them in their 20s, we're in that prime purchasing time. You think to yourself, I bought my first home for $99,000 in Bay Village. You can't buy the garage for $99,000.
No.
The same, 1,800 square foot bungalows or something like that, they're selling for over $300,000. So, it's not necessarily, I would say that two things. One, it's very hard for somebody to buy a home like that that's single. Unless they're a professional. And there are a lot more people in the professional part too. So you see a lot more people that are buying a home for, like we did, that used to be $99,000, but now it's $300,000, but they're joint. So there's husband and wife or two people buying a home together. So that makes it a little bit different too. And people are just understanding that a greater amount of their income needs to go to their housing expense, which is not uncommon for other cities.
The resale market blows my mind. But where I still have a hard time wrapping my head around it is new construction.
So expensive. Too.
Oh my goodness!
I mean,
And not that they're not beautiful,
Right.
and the houses aren't, but my goodness, land is out of hand, or maybe land is caught up to the rest of the country. Labor, material, and it's only going to get worse when they start rebuilding California and Florida and North Carolina. It's only going to get worse.
Yeah. Well, you talk about California. Well, two things. One, I agree that the building is expensive, but
It's needed.
You get what you want. So there's a lot of times people go and say, geez, this one, the kitchen wasn't good, or this one, this wasn't good, or this wasn't good. The neat thing about it, if you're going to go build a home, you're getting exactly what you want.
Exactly. But it's
So paying a little bit more to get exactly what you
Oh,
want.
sure.
Definitely beneficial. And some of the builders, especially the builders I work with, do such a fantastic job and build a really quality product. So I think that's really, it's beneficial for a lot of people.
they're selling.
Selling.
They're selling like crazy.
Yeah.
You go into any subdivision and they're just building.
Yep.
It's just from coming into getting out of college and going into that business and knowing what boy, if we were at $100 a foot, we were crazy.
Right.
But yeah, it's. But the reason we're one point that we're in lack of inventory is because new home construction was basically non-existent for several years, and
Right.
we're still not caught up
Well,
to.
Yeah. And so the bank that I work for is big in the Carolinas, too. And you should see that, just a new construction.
I
It's just
don't
all
think
over
I've ever
stuff.
been
It's
through
just
there. So crazy.
Crazy.
Oh,
Crazy.
goodness.
Yeah.
Tim, I ask everyone this. The name of my podcast is The Blueprint, so I ask everybody, what's been your blueprint for success, Tim?
Yeah, I think my blueprint of success is making sure that I connect myself with the real estate community, understanding the value that a good, experienced, knowledgeable real estate agent has, making sure that I'm the extension of that. And I think if you're really smart and you understand the value there, and you hire somebody who is a good, experienced real estate agent, like anybody on the Della Vella team, that matches yourself up with somebody like myself. And if you do that, the home buying process can be extremely stressful and unpleasant. If you pick the right people, it'll be beautiful, and it'll be very, the stress will not be there as much as it would be, and you really enjoy yourself, and then you can move into the home and be really happy doing so.
The one thing I can say about you, since I know you and I've done business with you, and this is just a compliment on your on towards you, and I always say I want to be more like Tim Atkinson in this way. You were so grateful. You were so stay in touch, and you remind me when it's my client's birthday. You know when it's my birthday, my wife's. I love that you do stuff like that. You're just so kind and thoughtful. Was that something that you learned through the hospitality business, or is that just a Tim Atkinson?
No, I'm sure I learned that from my mom.
Wow, that's even better.
Yes,
good on you, Mom.
Yes, good on my
yes,
mom.
and your mom is so lovely.
My mom was wonderful. Thank you
Just
very
so
much.
lovely.
So no, that's just
but
the
yeah,
person I am.
that's you have done that forever, and it's just I want to emulate that, and I always say it all the time. I'm going to be like Tim Atkinson.
I appreciate it, and I'm sure you are. And the neat thing about it is, we picked a profession that we get to interact with people. And
That's great, isn't it? And just meet people.
Yeah. But then they're going to do something that's so special to them, and they're going to involve me. And I tell people all the time, and I hope they believe me when I say it, I'm like, I'm really excited for you. And then so somebody will call me up, and I know it's not a transaction. It's an actual process that people are going through. And so a lot of times people just, I'm going to buy 123 Main Street. So when somebody tells me they're going to buy 123 Main Street, I look it up. I pull it up on social media, and I say, well, let me look at it. And I'm like, oh, nice man cave, or wow, what a deck, or boy, that's a beautiful,
So you're always on the MLS, because another thing that you do is anytime I have a listing, you'll
get that out to you.
Hey, this looks great.
Right.
But so you are like me in a way that you're following every day what's going on in the market.
Absolutely. And way back when I started, I used to remember there would be a lot more open houses and brokers open, so I get in the car and drive there so I could say, wow, that's the one by the park.
I think that's how I met you, Tim.
It might be, yes. I think it definitely, because that was how I did everything on Saturdays and Sundays, get in the car and go out and meet the people and see. But more importantly, because I don't want to be the guy who just said, oh, here's your rate and here's your closing costs, here's the program, sign here. I want to be the guy that you said, hey, listen, here's a guy that I hired and really cared about me buying this house, really cared about me getting the best product program and the process, made sure it was as least stressful as possible. And I do care. And so knowing that, oh, you bought a home in Avon Lake, okay, that's a great community. I have some friends that live there too, and my uncle plays pickleball there or something like that too. And they're like, that's great. I try to attend as many of my closings, and I'm doing a good job of attending them too, only because this is a job that is a little more on the phone and through the computer, and I don't get to see my customers as much. So being there at the closing time is great. So there's one lady who just bought a place in West Winds. I'm like, I love that West Winds area. And once again, it's because I go over there and play pickleball with my uncle from time to time. But it's just a great family community. She was actually buying a condo and kind of retiring or downsizing a little bit. And I'm like, that's fantastic, kind of going through that a little bit myself. So just making sure that I'm not the number pusher, that I'm somebody who really cares, and I do. I think that makes a big difference.
And it shows, Tim. And you're also very humble. I mean, you would think with your success, you'd walk in a room and you would be very arrogant. You're not.
Thank you.
You're just you got a fantastic way about you. Do you have any? I know we're not prognosticators or economists, but your thoughts for this coming year on what you think's going to happen?
Yeah, I think it's an interesting question too. Interest rates are out of the 7s. They're in the mid-6s.
Okay.
The hopes is that within the next maybe month period of time, they can get down into the low 6s by, a gift. They might teeter on the high 5s, and that'll motivate more people to get their houses on the market to sell their homes. People want to sell their homes, but they're not because interest rates are higher. So maybe getting an interest rate and knowing that they're, the sooner they get one, the sooner they can get it at today's price compared to next year's price or the following year makes a lot of sense. So I think it'll just be consistent. It'll be a consistent year of real estate transactions, and the smart people will make sure that they buy this year.
So Tim, how if I'm a buyer, how do I get a hold of you?
You can get a hold of me a couple different ways. Obviously, it's Tim Atkinson at First National Bank is where I work, and my phone number is 216-347-2296, and you can also text me on that number. Or you can email me at Atkinson T, so A-T as in Tom, K-I-N-S-O-N-T at fnb-corp.com.
Fantastic. 5-star rating with Tim Atkinson. You will be happy. So, Timmy, thank you for coming in. I appreciate that. This was great conversation,
I enjoyed it, too.
as I knew it would be. Thanks for listening. I hope you enjoyed this conversation. Make sure to follow us on social media at MDV The Blueprint on Instagram, TikTok, and YouTube. We post a ton of great content. And please don't forget to subscribe to our podcast channel so you never miss out on an episode. Thanks again, and see you next time.